So welcome to Town Hall. Wow, 87. 2 years we've been doing this, and it's a lot of people show up. We get a lot of great invites for this, so we're thankful to have it. Let's move on to the next slide. Your hosts today are myself. I'm John Best. I am co-founder of Best Innovation Group. I formerly was been with a few credit unions. My alma maters are Suncoast and GTE Credit Union and Westcom, all high-performing, incredible organizations who have been part of. Very blessed to have had those opportunities. And now we run Best Innovation Group, where we do interesting and fun stuff for credit unions, a lot of innovation, those sorts of things. And with me, as always, and I just told the story, is Mike Lawson. Hey, Mike.
Hello, John. How are you, sir?
I am doing good. Glad to see the garage is still there for you. I'm in my Tennessee
garage is still
home
here.
Hey,
trying to make some minor improvements, but it's still here.
You recognize there's a shirt behind me. The closet's open, but there's a shirt behind me. I found one of the old WRG Rock Me shirts.
Oh, so, did you?
Yeah, I put that up just out of fun.
I'm very impressed with your Zoolander portrait picture there.
Oh, which one is it? No, the one here. That's actually Prince, believe it or not.
No, the picture of you pouting in the.
Oh yes,
like
that's
my
my
model on.
Yeah,
on
I was trying that. That is my Zoolander shot. You're right.
Yeah.
Yeah, you got to suck your cheeks in.
Oh, there. Oh, yeah.
Yeah.
That's a good look, John.
Yep. So let's move on to the next slide. We'll talk about the sponsors. So as we went along here, we got sponsors. Matter of fact, this week coming up, I'm speaking, Maddie, where am I speaking? And on what? This is our voice in the sky. It's usually her mom, Melissa, who runs this, but she's out. So Madison has stepped in and she's awesome. So Madison, where am I speaking next week?
You will be at the Grand Hyatt Hotel in Denver on June 14th.
Speaking about what?
That is a great question.
For all of us. It's about something.
Whatever you want to speak on, John.
It's are you going to be there, Mike? It's the Technology CUNA CIO forum that Fernando is the chair of.
No.
Oh, that's right. You're not invited. I forgot about that after the incident.
Left me off that one.
But
We'll
anyways,
be speaking about the digital revolution.
Oh, the revolution. I love the digital
Yes.
revolution. Yes. Yeah, I do remember that. We're going to free the digital slaves. It's going to be awesome. So, no,
what conference is that again?
It's the CIO conference that's coming up. So,
okay.
It's we're going to have it in, it's the same one that they combined. It used to be the tech conference and now it's the tech operations. And
okay.
I love that conference, and it happens to be in Denver. So I'll be at the Gaylord, I believe is where it is, outside of Denver. So that's where I'll be next week. And then after that, I'll be out in Santa Fe doing the CEO Roundtable, doing some facilitating for that, which is super exciting. That's September, I think, 14th. So yeah, finally got some travel on the books. And what I was going to say is, I can't speak highly enough of CUNA and their events. What I was just mentioning earlier is that one of the great things about CUNA is that, they do have an event for everyone. They have the tech ops, they have HR. I spoke at the HR conference. That was super fun. Lending, and just so many things ways you can get involved and meet your peers and be able to collaborate and find those opportunities. So check it out, www.cuna.org. It's not too late to register. I bet Fernando will give you free tickets to the tech op if you want to come. I bet you even pay your airfare, right? It's just the forum only. Right? The conference is this fall, so it's just the forum.
That's what I thought. Yeah, because I'm like, well, it's a little early for the
facilitating the forum.
Okay,
so I'm
super excited to get that one.
I don't know if you're invited. I'm going to try to get you in though. I'm going to try.
Thank you. I appreciate that. I need all the help I can get.
Speaking of conferences, why don't you tell us what's going on with Correlation? Another one of our great sponsors.
Correlation just had their conference a couple of weeks ago, and oh my gosh, if you ever want to go to a place that has a lot of forward-thinking people, especially in the financial services space, the Correlation conference is for you. A lot of very proactive, forward-thinking people there, thinking about what the future is for credit unions technology wise. And it was just really, I don't know, a breath of fresh air, I guess. I mean, just obviously we're back out and seeing people again. That's a breath of fresh air in itself, but just to talk to people and have people just talk about the future and what they're thinking of doing. And it's really cool to see what's happening out there in credit union land technology wise. And Correlation, at this conference, they were actually, the hub of it all, because if you're going to start a credit union, John, I mean, what core processor would you want? Correlation's keystone.
You want something that's in the century and certainly, Yeah, they've got the platform. I think I was the first keynote speaker at their first conference.
You were.
I think I was. I was much younger then.
We all?
They also moved Jeff Dent into a really key position. So very excited to hear about that.
He is now the CIO. Speaking of CIOs, yeah, he's going to be doing more of a strategy, looking on the horizon as far as technology goes. We had a big interview with him there as well that we can share with you guys as well. So yeah, it's a lot of changes at Correlation, but all for the good, and just really exciting. Again, just to being around people, forward-thinking people there, it just really kind of get you jazzed and get you thinking about what's going to happen.
Was Tom O'Shea there?
Tom O'Shea was there, and I interviewed him as well.
So how'd you explain that? Probably dropped a lot, the whole forward-thinking thing.
And there he is. Speak of the devil.
Yeah, there he is. Well, it sounded like it was fun, and that was a great place for him to go.
Yeah, good folks at Correlation for sure.
I just had to give him some crap because. Member Pass is a hassle way for you to control and prove your identity very quickly and easily while you're protecting your information. It's also it is the only QSO that I know of that is doing this sort of identity platform that's based on the blockchain. It's really, really powerful. And with our speaker today, it probably has some bearing because wealth management is all about dealing with your different pieces of wealth. And I have a lot of questions about that. So check it out, Member Pass. We've got a lot of things going on with that. If you haven't been to crypto.report, and that's sponsored by them. Also, if you haven't been to the metaverse or part of metabranch.io, and I'll let Madison put both of those in the chat, go check them out. CU Broadcast, he's been doing this as long as I've known him. I remember when you first started this, it's the place to go and find out what's going on. And there is nobody better at interviewing and talking to these people. Whoops, we're seeing a different screen there. There is nobody better at going and chatting with these folks and getting the information out of them than my friend Mike Lawson. If you haven't been there, you need to go there. As a matter of fact, Ben, I believe you were our guest today was already on that program, and
Ben was
on. We're going to reference that. So
yeah.
Yep. And then finally,
talk about Best Innovation Group. What you guys, what's the latest and greatest there, John?
We've just been doing a ton of SDK work in the IC.
Oh, are you? Okay.
Yeah, between the Innovation Club and the SDK work, we're full up.
Right on.
It's doing tons of stuff for Alchemy, Q2. If you've got something you want done in your home banking and they don't have time, we do. That's what we do, and we're really good at it. So
right on.
Come check it out. Just go to Big Tech. You'll find, if you're interested in the Innovation Club, which is our group of now 16 Canadians, which Fernando's part of. And I know he would speak highly of it, or I believe he would, at least. If there's $10 in it for you, Fernando, then certainly check it out. So let's get on. Let's have our guest this week. Let's introduce him. So let's move to the next slide here. There are the two things if you haven't seen them. Oh, there's the old slides from when we used to teach this. So
that's right. Oh, yeah. Wow.
Check him out. You talk about me and my Zoolander look. Look at you.
I know. I'm beginning to regret opening my mouth.
Pick on me for my Zoolander.
Sorry about the technical difficulties.
Oh, no worries.
There, look at that.
Look at that. All right. Well, let's get rolling here. Mike, you want to introduce our guest and talk a little bit about the CU broadcast. We certainly don't want to, the goal of this broadcast is always to facilitate conversation around, and we bring in guests to facilitate conversation around specific topics. I think this is a really extremely important one. So go ahead, Mike, and introduce our person.
Yeah, thanks, John.
Tell us a little bit about the interview.
I get a lot of obviously media pitches for folks to come on the show and come on and talk about what they're doing and stuff like this. But and many of them, a ton of them are fantastic. This one really caught my eye when Ben's came across my email box, and it all had to do with digital wealth management or wealth tech, if you will. And it just floored me. I went, oh my gosh, this is something we're all going to have to get used to now, is dealing with their digital assets and digital investing. And again, going back to wealth tech or digital wealth management. So it was just fascinating to me just reading about it. And then I said, I got to have Ben on the show to talk more about this. Cause I don't know that much about it. And I'm still trying to wrap my head around, especially the crypto stuff and the NFT stuff that we're going to talk about. So I'm still trying to educate myself as best I can. So I have really cool people like Ben come on the show with Unify Money, and we just had a fantastic conversation about about wealth technology, digital wealth management, and even more so the connection with credit unions, the connection with financial institutions. What's their role in this place? So Ben, I was just over the moon when you came on the show. We talked about it. And again, we can I'll send you guys a link in the chat. You guys can go check it out yourself. But we have Ben right here in person. Why not talk about this type of stuff? So Ben, do you want to give us a quick overview on Unify Money and what you guys are doing out there, and then kind of connect the dots to credit unions here?
Yeah, absolutely. And thanks so much. And I remember our call, when you switched off recording, we actually continued to talk for about 10 minutes. And
oh, yeah.
And it's a shame.
I don't usually do that. I mean,
it was more fun.
You're
actually.
lucky. Normally he just hangs up. You're gone. He's like,
I'm hanging up right away.
I'm out with you.
Yeah.
So I'll start with the formal piece. Ben Soppitt, co-founder and CEO of Unify Money, 3-year-old company. We're a multi-asset digital wealth management platform for community financial institutions. So today we support passive and active investing in over 10,000 stocks and ETFs. We have over 80 cryptocurrencies, and we have precious metals. On our roadmap, we have retirement accounts, including both traditional retirement accounts and alternative asset retirement accounts. We have financial planning software, total net worth tracking, an investment rewards credit card, so that your customers can earn points and then convert those points into investable assets. We have, what else? Once we have our broker-dealer license, we'll be able to support Reg A and Reg A Plus securities. So these are the sort of things you see on Rally Road. These are very esoteric things like fractional investing in sneakers, fractional investing in wine, farmland, art, sports memorabilia, collectibles. The one I always bring up when I'm talking to finance professionals is the fact that you can invest in Tiger Woods' practice putter. And it always gets a laugh from anyone in finance.
I bet.
Because when I say sneakers, people sort of grimace. But when I say Tiger Woods golf putter, they go, "Oh, that would be interesting."
Oh yeah, in finance,
now you have my attention.
Yeah, and that's sort of the point. These alternative assets shouldn't be the tail wagging the dog. In our pyramid of products, the absolute foundation is the robo portfolio, the robo advisory. We fundamentally believe in the get rich slowly philosophy, not the get rich quick, which is dollar cost averaging, saving as much as you can every month, dollar cost averaging that into a low cost, highly diversified fund. If you have that, and if you do that for 20 or 30 years, doesn't matter if you put in $5 or 5,000, you may not retire rich, but you won't retire poor. And that's the whole point. Less than 30% of people are invested in the stock market. History's greatest mass wealth creation engine ever created. Most people aren't doing that, but everyone has a bank account. So there's our opportunity.
Yeah.
Most people the average age for saving for retirement is 32. You've already lost 12 years of compound interest. And the most important 12 years, the first 12 years. So this is what we're trying to solve for. The problem with dollar cost averaging and passive investing is that it's super boring. And it's like trying to sell a pension to a 25-year-old. They think they're going to live forever. Why would they ever need a pension? The payoff is 20 or 30 years time. Very difficult to get people excited about that. It's like trying to sell people an ETF or a 0.01% APY. It's just like, yeah, I don't care. But tell them you can invest in something they care about, whether it's golf or wine or crypto or collectibles or Mickey Mantle's bat, then you got their attention. And there is a role for alternative assets in a diversified fund, but it's only a role. But I think more importantly, these alternative assets give us the ability to engage with consumers very easily, get them to invest in what they care about, what their hobbies and interests are. But most importantly, we use that to catalyze the behaviors they should be doing, which is the boring but necessary stuff of dollar cost averaging into a low cost, highly diversified fund.
So
go ahead, John.
So one, do you have more slides? If not, I was going to bring this down. I'd like to spotlight you so we get your video. I don't think you have more slides. Yep, perfect. All right. So I just wanted to put you really big on the screen and make you deal with that. So alternative assets. So some of it sounds suspiciously a little like NFTs and stuff, but can you give just
NFTs would be in that. We want to be the Amazon of digital wealth management. Anything and everything you can invest in through a mobile app or web browser, as long as it's compliant, as long as the tech is accessible and the economics work, we would want to, or we would consider integrating it into our platform and making it available to credit unions and through credit unions to their end consumers.
So an alternative asset could be, I like that you mentioned the collectibles, because that's something that, like, for example, I have a stupid alternative asset. Actually, I think my son has it right now, but we used to be neighbors with the Lightning, Tampa Bay Lightning's coach back when they won their very first Stanley Cup. And somehow, I think he went to our church or something. Somehow, Ryan, my son, and I wound up with a signed stick of every player from that, from that winning season. It's probably worth something, but it's certainly not considered in any I don't have it like in, it's not in his will if he even has one. It certainly isn't in mine. And so it's those, like I have guitars, like,
I was going to say, you can, there is actually a company you can invest in song IP. So you can actually participate in the ongoing revenue from a song title. You can invest in rare musical instruments or famous musical instruments.
So like I could make here's what I'd like to invest in: Criminal Minds. I think that show.
Well, if I remind you, compliant, technical, and economic, and I think you failed number one, but carry on.
Well, no, Criminal Minds, the show on Netflix.
Oh, I'm sorry.
It's got to be making
Criminal Minds in general.
Not Criminal Minds in general. I already have my own. But Criminal Minds, the show, must be making 10 trillion billion. It's always on every network. And then, it's the highest streamed show on Netflix.
Really?
Yeah. Who knew?
Wow.
And so
I've never heard of it. So
but to your point, a song or something like that, that's something I would never think to invest in. And you say you're not looking to get rich fast, but well, tell me this: is your service so a lot of credit unions have members that are, by and large, the average age of the credit union membership is somewhere around in the 40s, like these days, lower 40s. It used to be a lot higher. So, it's 40 to 45. And if someone wants to tell me what the average, maybe a few people could put it in the thing there.
I've always heard 47.
Right. So everybody who knows it, please put in the chat your average age for your credit union member. Okay, 47 is what Lawson said. We'll see if everybody else puts it in. So while they do that, so who is this targeted at in terms of, because that's one thing I've been wondering about.
So there's an interesting thing about the fintech market, in that most fintechs are very focused on solving for super niche needs.
Yes.
And it's the sort of wedge strategy. You find your beachhead, you try and land on the beach, and then you slowly increase your beachhead until you take over the world. Which is great, but it's led to two things. Yes, it's optimized for certain niche activities within the wider financial ecosystem, but it's also led to great complexity. So it's not unusual now for a millennial to have 10 to 15 different apps to manage their money. And it's just physically impossible to track that many apps.
Yeah, so that was my point earlier. Yeah. You
might gain by having a better, ability to invest in collectibles. But if your credit card is delivering, 25 basis points, then you're probably losing way more value there. Or whether if you're not dollar cost averaging, then you're probably losing a much more significant amount on a compound basis. So what we were interested in doing was actually solving for most mass affluent people's sins with personal finance, and we're all guilty of them to a greater or lesser extent. We're not trying to solve for the problems of the super rich, bless them, they have their own problems, and we're not trying to solve for people below the poverty line, they have their own problems. We're trying to solve for the 60 to 70% of mass affluent people in the market, people who can afford to invest, probably don't, and would benefit greatly, as would the whole economy. So, for example, not having too much money in cash in a low or no interest account, not helping you, particularly in the current market.
Yes.
Not having a credit card that maximizes your return on spend is another big no-no. The average in the market's 125 basis points, but unfortunately, the market has really gone towards using credit cards for affluent signaling. You can see that when you get credit card companies marketing how heavy the card is. It's like, who thought that was a good idea, to buy financial services based on the weight of delivery?
or the texture of the card, like this one's made of ceramic pearl. It has no markings on it.
Exactly.
It's just a slab of ceramic that you.
It's just affluent signaling, which, in my view, has no role in a well-managed financial life. And the third, and probably the greatest, is that most people don't dollar cost average because it's boring, takes a lot of effort. You need to think about it, and it seems difficult, and the payoff is in 20 or 30 years, so that we tend to discount things that are further out. So we tend to psychologically, which is the old toaster argument, we tend to value low value things that are immediate versus high value things that are further in the distance.
Well, and it's funny you say that because, well, one, I think the dollar cost averaging, just for everyone, can you give me like, how would I calculate that? Just so everybody can hear what that example is like.
So that's simply a way of ensuring that you're not trying to time the market. So the risk in timing the market is you're going to be wrong more often than you're going to be right, and your losses are going to be greater than your gains. So you may time the market. I mean, look at Bitcoin. How many people bought Bitcoin at 40, at 50, at 60? I know I did. And we timed the market wrong. The question is the market at the bottom today? So if you buy at 30 today, is it going to go back to, we don't know. But if you dollar cost average for the last 2 years, you'd probably have an average of, X. And what
you're
that
just
means
buying
is
it continually.
And that's where technology has a huge role to play because it takes all the work out of it.
Yeah.
So on Unified Money, you can set up your robo account, and it will automatically fund your robo to whatever level that you want, and you can change that anytime. You can put lump sums in if you get a bonus or something. But the important thing is your dollar cost averaging. Doesn't matter if it's $5 or 500. Every month you're in the market, and so you're going to get an average price of the market. And if you look over the last 100 years, the stock market has returned, or the S&P 500 has returned on average 10% every year. In fact, it's over 10%.
Regardless of the time, yeah.
Yeah, the variability is very great, but if you put in money every single year, you would have got 10% compounded over 100 years. It's a huge amount. That's why I refer to the stock market as history's greatest mass wealth creation engine ever. The pity of it is that it's up until relatively recently, it's been the preserve of rich people, the minority who get to benefit for that.
Right, because it wasn't easy to do, just like buying a home.
It wasn't easy to do, absolutely.
That's the other thing that probably builds a lot, it builds a lot of wealth is purchasing, assets like a home.
Absolutely. And we actually did a back of a napkin calculation, and we worked out that if the entire millennial generation, for the entirety of their working life, was to solve for those three things, it would generate $20 trillion of value. And this is directly into the economy. This is into the people who buy homes, buy cars, renovate their homes, go on holiday, go to grocery stores. The impact on the economy is absolutely massive, and everyone benefits. So that is the big picture. That's the big vision and mission of what we're trying to achieve, because we are all guilty of committing these minor infractions about not optimizing our financial life every single day. And it compounds tragically so that we all retire significantly poorer than we would if we'd solved these. And what we're trying to do is find ways to make that as easy as paying for an Uber, making saving and investing as easy as paying for an Uber. And if you think about, why have we been so great at solving for friction in payments? It's because the likes of the big brand banks and Visa and MasterCard and merchants, Amazon, Uber, they worked out that if something's really, really easy, we do it more, and we do it not without thinking. So that's why we solved, as an industry, we solved payments, because it's in the interest of big industry. But why is it so difficult to save and invest? Just as difficult as it was 30 years ago. It's because it's not in Chase's interest to have those funds at a Vanguard fund. It's in the consumer's interest.
Because they can't lend on it. They can't lend on it, which is so, my only person to answer was Alan, who runs True West, who's extremely knowledgeable about this. Alan, if you don't mind, this is a CEO of a large credit union in Arizona and a friend. Alan, from your perspective, so, when you look at this, you've got an average age of 48. And so one thing you and I discussed, I remember at your when we did your session with your board, was we discussed that people weren't savers as much. Like we lost that, like we went from the greatest generation who went through the Depression, and they were big savers. They were crazy savers. Like I said, my grandmother would reuse tinfoil. And then to the boomers who are still kind of savers, and then on into Gen Y, Gen X, those sorts of things. And that culture had been lost. Is there, like, when you look at it, because I know your credit union actually calls people to say, hey, you shouldn't have 250,000 in your checking account. It's past the FDIC at least. And on top of that, you're not, I know you guys make those outbound calls. So would you see like something like this as a wealth, as a tool for that group, or do you see it more as something that would be for the up and coming group that you want to encourage to save to continue to be financially healthy, or both?
Well, off the top of my head, I'd say more of the up and coming. I mean, we've got a wealth management program, which is delivered by a team of advisors. But I'd be the first to admit that their forte is really people who have at least 100,000 saved. I mean, they've got a lot of smaller clients, but yeah, and I think people the smaller your account, the more it's got to be easy. And something via technology makes a ton of sense for people who are starting out or just partway through the journey.
Mhm.
I mean, our experience is people who have large amounts of money like to be able to sit down with somebody either physically or on video and, kind of look them in the eye.
And I think that's what Ben was saying. This wasn't for them. He had a name for it. What did he say it was? Something affluent. The affluent averse? No, what was it you
So
called them?
we talk to a great many banks who have a wealth management business, and either it's their own or it's managed through LPL or Raymond James or Cetara, and it caters extremely well for rich older people with high AUM who want personal advice. It really ignores, purposely because it's not profitable, it's an RIA to serve people with lower AUM, it ignores people who are just starting out. Tomorrow's high net worth customers are being forced to go and find an alternative. Now, 10 years, 20 years, 30 years ago, there was no alternative. Today there is. It's called Robinhood, it's called Wealthfront, it's called Coinbase. And those companies want all of that customers' business, not just their investing. They want their banking business, which is why
So that's their beachhead. That's the beachhead that they want.
Absolutely. So if I'm 25 and I've just started work and I want to invest because I think that's a good idea, that's great. And I go to my credit union and they say, sorry, you don't have enough money to invest with us, go somewhere else. You are literally forcing them into the hands of your competitors.
So here's the question. I want to get a picture on this. And Kate has a question as well. But I want to get, so I log into True West Home Banking, and in there is a clicker somewhere, and there's an advertisement across the top that says, here is, Johnny Ramone's guitar, and would you like to invest in that? Plus,
So the customer experience is slightly different, and there's two parts to the customer experience. One part is you're already a customer, you're in the app. We currently are integrated with Banno and with Q2. We have a roadmap of about 9, 10 other digital banking platforms. You mentioned one of them earlier, Alchemy.
Yep.
That we're working through. So if you're in the Banno app, you see, if you're already a customer of Unify Money, you will see your balances. You will see your crypto balance, your robo balance, your precious metals balance, and your self-directed balance, and your total account with us. And that's important. One bank that we talked to had done some research, and they found that the average crypto investor checks their crypto app 65 times more frequently than their bank app. So by embedding that information in the bank app, we should naturally see much greater engagement because there's interesting.
That's what Gordy said last week with Unify for MyDig. Exactly.
Yeah.
It was 3x the number of times of their most engaged user. That was incredible to hear. I agree.
And then if you actually want to transact, you press the button, use Unify Money, and you SSO into our platform. So you see the necessary disclaimer telling you very clearly that you're moving from the bank's regulated or the credit union's regulated business into ours, and you can move seamlessly between the two environments. The funds are pulled from the customer's DDA, and most importantly, when the customer liquidates that holding, the funds go back to the DDA. Unlike with Coinbase, the money stays with Coinbase, and Coinbase is doing everything in its power to ensure that remains the case.
Right.
So that's the experience
but also if they take dividends, right?
Yeah, I mean, absolutely. Dividends reinvested, but the interest of Coinbase is to retain that customer and maximize their share of wallet. Whereas with us, we're really an extension of the bank's ecosystem and the customer's relationship with the bank. So if you open an account through your local credit union with Unify Money, you cannot access that account through any other channel. You can't go to another credit union or another bank. You can't download the app directly and access it. You have to go through the credit union which introduced you to us. Then the other side of it is the advertising piece. And something that we'll be launching in a couple of weeks is that we recognize different credit unions have different resources available and different capacity, also different knowledge around compliance to market investing products. So what we're doing is actually working with an ad agency to create a campaign that credit unions can customize. They can add their logo, they can change the pictures, but it's all compliant. All the disclaimers are in there, and they can literally take a banner, take a web page, take a bill stuffer or a branch poster, print it off, put their logo on it, print it off, and they know that they can run a compliant campaign. Can we add Triceratops skulls? Can we add Tiger Woods used putter? Absolutely, because that's much more interesting and unexpected to see that type of communication from your credit union. What you're used to seeing is fairly boring stuff, frankly. So the whole point of this is that it gives you the ability to talk to your customers about new and interesting things, which doesn't happen very often in this market.
So a couple questions. So I'm looking, I don't know if you can see the screen, but I'm showing your app. That's a nice little demo here. So my first question is, when I buy, first of all, congratulations, it's a very nice looking app. So when I buy crypto, that is a custodial agreement, not a transactional agreement. In other words, it's not Coinbase where if I bought some Bitcoin, I couldn't send it to another member. It's just I could buy it.
We have a fairly conservative approach in that our whole ecosystem is a closed loop. So the only way you can get money in is from your credit union, and the only way you can get money out is from your credit union. So we do not provide for third-party access to the crypto wallet, for example. You can't bring coins in and you can't bring coins out. You can sell those coins, and that money would automatically go back into your FDIC insured or other DDA. So it's a very conservative model, but by design, because we're not trying to cater for hardcore crypto enthusiasts. They're already very, very well served, and it accounts for 15% of the population.
Right, but you have a lot of coins in here. You have a lot more coins than other people. I'm really surprised.
Well, we have a lot more coins than NYDIG, that's for sure.
Yeah, there's a lot of coins in there.
We have over 80. We work with a crypto exchange called Gemini.
I know Gemini.
Gemini.
Yeah.
So that brings me to another question. So one thing that Gemini does that just became an issue just recently because of something the SEC did is they were offering interest-bearing accounts for basically like a CD of crypto, similar to what Nexo does. Now Nexo just said they're not going to do it in the United States anymore because of what happened with Luma and some of those others. But I see here when I look at this, one of the things is it looks like you have some sort of waypoints, which sounds like
Shop Your Way is our partner. They're the former Sears credit card group.
Okay.
And we have a strategic partnership with them, and we in a couple of weeks we're actually going to announce a whole bunch of initiatives with them whereby we're bringing new benefits to the membership, which are really around financial management and managing their financial life. So that's one example of how that would be expressed within our app.
So future-wise, you could definitely buy it. It looks like you could use your waypoints, and you can, when you sell it, I love that the money comes back to the crate. So for everybody on the call, one thing that's coming out of the crypto report that we're putting together is we're discovering, and Alan, you know this because some of your reports come out of that, but that very little of the members, if they are taking dividends from their crypto earnings, are putting it back into the credit union when they go through Coinbase or other things. I don't know what they're doing with it, but we don't see a lot of deposits when we could see somebody who bought low, and we just don't see anything come back, and we think they're taking those dividends. We don't think they're sitting on them, and so we're wondering where that goes. One of the things we're going to be adding to the crypto report is recurring, because we're trying. So this crypto report, the thing we're talking about, Ben, is we're putting together a report for the credit industry where we're trying to figure out how many people are using Gemini, Coinbase, CoinMama, the list goes on, and they're ACHing out of the credit union, and then they're moving that money and using it to buy crypto, which would give us some idea of like what the need is, what the want is. We don't necessarily understand the point of it, which I want to get to here in a minute. I want to ask you a question about that, but we do understand they're doing it, and it gives us some idea. The other side of that was we just recently realized that we're looking now, and Kevin was actually, Kevin Wright, who's on the call, so we got some good codes from him, but we're looking to discover reoccurring. We want to see how many people have it on a set and forget out of Coinbase, out of the guys that have an ACH reoccurring, because I'd like to know the difference of that versus people who are buying based on the trend, like down or up. But the question I have for you is, one, would you ever consider offering the dividend producing account, and would you share that with the credit union, or how does that work? Because that seems like that's a big motivator for people to take all those coins and put them somewhere rather than just wait for the market to go up and down, like Nexo or Gemini. The second thing would be, when we look at wealth creation, and you mentioned the stock market, that was a great thing. And you said that was the best thing in the market, but it was a thing where not everybody could play. Now they can. But crypto's been the thing that has been everybody can play. And I know as I talk to some younger people, they feel like this is their only option for wealth, to create wealth in today's sort of world. You're not going to create wealth by going out and creating a new business on the internet, because in their minds, it's all been done. You're not going to create wealth
I think if you asked those people a few weeks ago or even a few months ago, they probably would have had that opinion. But the market has a way of teaching us the fallacies that we hold and the psychological biases. So you'd probably get a different answer today if that's.
I don't know. The ones I'm talking to are going, yeah, this is just a dip. Next, it's 2 steps backwards, and it'll be forward again at 100.
There's a really great book called This Time It's Different, which looks at the last 800 years of financial bubbles and how, never ever trust anyone who says this time it's different. And yes, if you're young and this is the first sort of boom and bust you've been through, it's very, very attractive. But that's why I think it's deeply irresponsible to be pushing crypto, let alone a single instance of crypto like Bitcoin. And I don't understand why any reputable financial institution would do that. I do believe there is a role for alternative assets, and crypto is one example of that, but it should be as part of a systematic wealth creation journey, long-term wealth creation journey. So that's how we think about our product stack. There's a role for all of these different things, but fundamentally it's about dollar cost averaging for 20 or 30 years. That is, on a probabilistic level and on a historical level, the only way that you can achieve a very high probability of retiring comfortably. Yes, you could be lucky. You could be, but the vast majority of people are not lucky. They time the market wrong. This is nothing new. There is billions and billions of pages of work on this. But fundamentally, if you're not offering that, or worse, if you're only offering gambling on the horses and you're not offering more conservative, more systematic approaches,
if you're only offering inside bets, and you got no outside, to put it in roulette terms, you got to have a bit of both. I agree to offset.
You would
it's like a digital portfolio, right?
Sorry?
Like a digital portfolio, basically? Having all these different avenues to go and invest in rather than just crypto.
That's what he's saying. It's a dollar cost average.
You have all this stuff.
Yeah,
you have all this other stuff.
The foundation of our pyramid of product is the robo. So that's a 15 basis points, which is half the price of Wealthfront. It's a highly diversified ETF-based portfolio, so low cost, very diversified. And technically, you can passively set up a recurring investment every month or whatever amount you want. So that for us is the ultimate ambition, is to get more people dollar cost averaging, more people engaged in their long-term wealth creation journey. Everything else is there to ensure that we're not forcing people to go in to other third parties to do what they want to do, but they embed what they do within an integrated wealth management journey. So that's one of the reasons we're developing and we'll be rolling out, hopefully in the next couple of months, our financial planning software, our financial calculators, so that you can actually see the performance of all of your assets, including your alternative ones, including crypto, but you see it as part of a holistic whole. Nice. The problem with the market is that we're very, very fragmented. You've got banks here, you've got investment apps there, you've got different investment apps for every single asset category. It's almost impossible to look holistically at your money. And we're trying to solve that. But we're trying to solve that for the mass affluent. We're trying to solve it for the 70% of the population, and we're trying to solve the sins of personal finance that we all commit. And they're generally sins of omission rather than commission. It's not the bad decisions you make; it's the decisions you don't make. Like leaving $250,000.
Well, and it's the long-term decision of that. Like, for example, you mentioned Bitcoin, and I thought that was a fantastic example because it is a long play. And so when I was,
I'm huge on blockchain, and I think it's a fantastic. And I know my future is going to be about, we're going to be hearing about blockchain until I die.
Right.
That doesn't mean that investing my pension in Bitcoin is the right answer.
Well, you got to decide whether Bitcoin is Napster or iTunes, right? And that's kind of the mentality of it. But But if you look at it as, what was it, 2008, I think I mined like 10. I bought something online for like 2. But then I took the hard drive and shut it down and realized, oh my God, when it hit like, I think 900 or 1,000, I was like, whoa, and I sold that. But had I kept those 6 today, it'd be 108,000.
But it's no different from any other asset. I worked at Nokia once when Nokia was at the height of its powers. And I remember everybody there that was boasting about their share options and how rich they were. They're not boasting anymore.
Nope.
Lehman Brothers, who knew? Who could have expected that? Netflix. This isn't the first time this has happened, and it's not unique to Bitcoin.
Right. Well, precious metals is, I like that you have precious metals in there, because I've made a lot more on gold in the last 5 years than I've made on crypto, to be honest with you. Because and who knows, I don't know what the heck's going on with nickel, but apparently we need it. You look at some of the other things. So look, going back to this, I want to get back to Kat's question.
Yeah.
So Kat mentioned removing the friction. What's your current API architecture? So one question I have is regarding the API. So as our members use your system to do all this, do we get all that data back for our data warehouses to use as part of our?
Yeah, so as a customer of ours, if you're using Banno, Q2, or any other platform we're on, you don't see an API because we're already pre-integrated. So this is a no-code configuration, 2 to 3 day implementation.
Wow. Okay. Now, if I want to go pull all my members and see what kind of crypto they've been buying and what gold and what they've been doing, I could get that report from you and include that in our data warehouse. Great.
Yep. So the customer agreements are very clear. Who we share your data with. And they agree to that as part of the, so, in terms, we get this often from people in financial institutions who are running the wealth management business. It's like, oh, you're competitive. It's like, no, we're not. We don't do anything that you do, and you don't do anything that we do. And by the way, if we get a customer who meets your AUM minimum and you want to sell them your advisory services, you should give them that opportunity.
Because they go to that level. Yeah.
Yeah. If you need support, and there are times in your life where you need support, like, get married, have kids, buy a house, get divorced.
One of those is death, and that's been happening a lot, is the transition of money, which I don't think, Alan and I were having a conversation about that. I don't think we do very well. Quick question for you on that. So from a wealth management perspective, from your client's perspective, I asked the average age earlier. I do think 47 is probably in the wheelhouse. What are you seeing? Like, can you share the demographics of, your current users and how many you have?
It's actually not something that is demographically, it's more psychographic. So one institution that works with LPL, they did some research and they found that over half of their LPL customers also have a Coinbase and a Robinhood account, or one or the other, or both.
I would say, yeah, it's just like me saying, I believe 95% of people who hold a credit card have an Amazon account.
Yeah.
And absolutely. I've proven that over and over again. Yeah.
So you could be 90 and you want to invest in crypto, or you think Tesla, or you think gold.
Oh, yeah. I had a meeting with a guy this morning who owns a building here, and
there is clearly a bias towards digital self-directed investing towards younger consumers, which makes sense because up until this point in history, they have been denied access because it cost $25 to do a trade and you needed $500,000 to have a broker. You had to be in a city where you could find a broker. It was when I was growing up, that's what it was. Yeah. You couldn't invest. You can now, and it's almost gone too far in some respects, in Cash App and things like that. But that's the opportunity, and that's the opportunity for credit unions, is to engage very easily, quickly, and at low cost with what consumers want to do and what they are doing. And whether we like it or not, people between the ages of 20 and 45 are increasingly using self-directed digital channels to trade all sorts of things. And there's a quote, I can't remember who said it, but it was like, no millionaire ever got rich by investing in a savings account. And I know nobody in the banking industry wants to hear that, but it's true. And if you care about the long-term wealth protection and growth of your customers, the world has changed, and the investment world has changed, and credit unions haven't. So they have to make a decision, and there's no right or wrong answer. Many credit unions are deciding to do what they do and do what they do well. They're making money, they're profitable, that's great. That's not our audience. We're talking to the ones who want to engage in a different way, want to expand how they serve customers, want to proactively help customers to grow and protect their wealth holistically. That's who we're talking to. So we're not right for every credit union or financial institution. Absolutely not. But the ones who are looking for answers about how to engage with more digital consumers who do want to expand their wealth management business or their banking offering, that's who we're talking to. And we're trying to make it as easy as possible, ensuring that there's no risk, that compliance is taken care of, that we're helping them on that journey.
Yeah, it's a turnkey solution. I think Alan has a question. He unmuted and made him
reappeared.
He reappeared like magic.
No, I was just going to make the observation. I agree with you, Ben. I mean, this doesn't compete with what credit unions do on the deposit side. Deposits are really about liquidity. Everybody needs liquidity. They need transaction accounts. But what you're talking about is something different, a different need that many, if not most, consumers have, which is investing or saving for whether it's a home or a retirement. Our rates are better than a lot, but I have to admit they're a fraction of the rate of inflation, which means that a year from now, money you have at the credit union will be worth less than it is today. And just to rub salt in the wound, you'll have to pay some taxes on that phantom income.
Yeah.
So yeah, I mean, to build stability, financial security, people need to be investing.
Yeah. So Alan, I have a question on the liquidity side of this, and Ben, this is for you as well. So currently today, people are doing, I mean, the point is they're doing what Ben is saying. We know that from our stuff. We 100% know that. So if they do it through Ben and his platform or a platform like that, whatever, where it can only go into the credit union, only go out back to the credit union, and you know about it, can you now consider that in your ALCO or as a available in terms of liquidity? Is there some percentage of that if you see it over time that you can consider
For liquidity?
Yeah, in general, just as as part of, like, I know we do that with like our Pershing accounts and things. We know we do that with CDs that come back around. I mean, we is that something you can look at here? I don't know that.
I mean, I don't know. We look at the assets under management as something that we're assisting members with on the wealth management side.
But it wouldn't change the books of the credit union, you think? So if it's still going out, then it's still going out. But it is indeed better to go out to somebody who can only bring it back to the credit union and not could take it to anywhere else.
Sure. Yeah.
Okay. That's what I was trying to understand. And Ben, I don't know, because
assuming that, I mean, obviously that's going to not be viewed as a positive by a lot of consumers.
Right. Yeah, they're not going to see that. So Ben, from your perspective, what's the average asset under management per user, or what can you expect if you fire this thing up?
It's extraordinarily broad, and the everything we do is fractional. So what we tend to do is try and maximize the breadth of people we can serve. Mm-hmm. And if you think about credit unions, you have credit unions who deal with high net worth individuals, and you have credit unions who deal with people in poverty and everything in between. We have one credit union we're working with who specializes in university students in a very affluent town. They're going to be interested in something fundamentally different to someone in the middle of the country in an agricultural region. So what we're trying to do is just ensure that there is mass market access. So you can invest in our platform for a few dollars. Everything's fractional, and we want to retain that. But we also want to ensure that we can grow with consumers. So as they get more sophisticated, they can do more sophisticated things, which is why we're looking at adding things like the financial planning software. Part of that financial planning software actually allows if the credit union has a wealth management business, they can actually create a hybrid model, much like personal capital, where they can use our platform to actually assist consumers who request help, but you don't want to give them the full service one-to-one advisory relationship. You maybe want to give them something more like personal capital, where you talk to them maybe on a Zoom call once a year or via email, or you have them look at your portfolio and advise you. So, we're thinking of how we can extend and expand the engagement model for credit unions with their customer base, and trying to ensure that all credit unions and all credit union customers can benefit from it or have access to it should they so wish.
So to Alan's point on that, will you be expanding the feature set to have things like stop loss or something along that line? Because it seems like if that's their whole point, then you would have to create those features? Because
Yeah,
that's what's in the stock market that saves a lot of people.
So, for example, margin accounts. We don't allow trading on margin today because our CIO feels most people don't understand it.
They don't.
And it invites risky behavior. So again, we're fairly conservative in our approach. We're trying to help very mainstream people, the long tail of consumers, the mass affluent consumers, not hardcore day traders or people who want highly sophisticated trading tools. So, we're that sort of middle market. We're the Ford Escort. We're not the Ferrari, and we're not the.
That's the only car I ever owned that caught fire on me, so you know.
Not a good choice then. It occurs to me I didn't answer your question about the earn products and would we ever offer them.
Yes, I want to answer that, but I also want to come back to the stop loss and understand it a bit more. But yeah, earn. Tell me about that.
So I'll give you an example. So we have an account with our treasury. We have an account with Silicon Valley Bank. I earn 0 interest on my account with Silicon Valley Bank. And frankly, it's the hardest bank I've ever worked with in terms of its technical interface and ability to pay for things. We hold our treasury in stablecoin, and I get 7% on that.
Yeah.
So, the choice is fairly stark. So is that an attractive proposition? I think so. Does it come with risk? Yes, but my treasury is bigger than the FDIC insurance limit, so the risk is inherent anyway. And I think to date we've made $100,000 in interest, give or take. So is this an attractive way? Think about Coinbase. Coinbase is offering anything up to 19% interest. And they have a debit card. And you can put it in an FDIC insured account as well. That's why that money is not coming back, because they have everything an average person would need. And plus they're getting the opportunity for 19%, whether they choose to take it or not. So yes, we are looking at how we can do that. We are actually working with a bank in Texas who specifically wants to create a compliant way to offer crypto earn products. And it's clearly a moving feast, but yes, we're looking at it. We're working with different compliance companies and attorneys to try and figure out what is the most compliant way to do that a bank would do that. And then we would offer that as a bank product to other banks and credit unions.
I like it. It's good to know, because I think that's really important to this, because we are looking, and I think Alan had to leave, but he would agree. I think Tom would, former CEO, and always has talked about this very thing. We've been talking about this forever, Tom O'Shea. But I think that the mentality that we've got to create an opportunity to get something past the savings account. Otherwise, we have to start charging for checking accounts. The question is if you're going to build something like that out, hopefully there'd be opportunity for shared earnings. The other side of it, in the stop loss, piece that I was talking about, if we're going to automate them, allowing it to go in, it's kind of like e-statements. You got to be able to turn it on and off the spigot. You can turn off the spigot, but the worry I have with the more volatile stuff is we got to have a way to say, hey, if it starts crashing, if it drops more than 20%, which is what normal tools have, like Bittrex and whatnot, if I see the candles heading for the red, because the problem, you're talking about a long-term set it and forget it type program with dollar cost averages. The challenge is that one of those assets is fairly volatile. I mean, they all are.
So what I would say, John, is that this is your bias towards your investment strategy.
Okay.
And again, the whole point of dollar cost averaging is that you don't worry about short-term volatility.
Yeah, but then we talked earlier that this is different. I don't know. I don't disagree with you. I just wondering if those features would be. I just feel like that's how people sort of advance to the other things, as they see those other options. They get their foot in the door. This has happened to us before with other products like bill pay, where we've put together a bill pay platform that was good and safe and easy and did exactly what they needed. But then as the member became more experienced in bills and whatnot, they started using Truebill or these other things that had a few other features, like dealing with turning off Hulu or recurring.
Well, they wanted to add a debit or credit card and earn points.
Yeah, exactly. Things like that. And so
we have an incredibly long roadmap full of things that I would love to bring in very, very quickly. We always look at, how applicable is this to our channel and our audience? So, for example, the financial planning we feel is absolutely core.
Sure.
The total net worth tracking, absolutely core. There is a never-ending list of features and functionality one can add. But it has to go through a prioritization. And
yeah. But so it's not like a business decision that we're not going to give them something like that. It's just you're starting now and you got to build it out. 2 years from now, it'll look different. That's good. That's all. That was the only question I had. But I do have that bias. You're right, because I've been, dealing with this since it was $300. And
so, it's one of the things we suffer from, in that when we're talking to people in the financial space, and they'll say, well, I don't care about crypto, I think it's rubbish. And I'm like, I don't actually care about your opinion, because you're not
your opinion. You're not my target audience.
And by the way, I'm not selling crypto either. I'm selling is a wealth management platform,
right?
And we're agnostic towards, if people try and pick an argument with me, why are you offering gold? It should be a gold ETF. It should be digital this. It should be
exactly.
And I'm like, some people want to do that, and who am I to stop them? We want to be Amazon.
And they'll start yelling about energy assets next, and that's a whole nother ball of wax. No, I think this is great. I think it's a very unique way of going. So do you have let's say I have a credit union, I don't want to jump out to your app. I want to build it into mine. I want to put it in Flow. A lot of what we know as far as members, interacting, we find that we get greater buy-in when they don't jump out to a different experience. And there are a lot of credit that say, oh yeah, we have the resources. We want to integrate this, not in a SSO or a single sign-on way.
Yeah, I mean, if we haven't come across that many financial institutions, even quite large ones, who are actually doing custom development and running their own apps. Most of them are using apps off the shelf from the likes of Jack Henry and Q2. Sure. You don't have the resources to manage them and keep the updates, which actually means, ironically, that if you think about it, it would cost someone like Varo, as an example, about $20 million and 2 to 3 years to deploy what we've already built. It would take any credit union on Banner or Q2 3 days and a couple of $1,000s. So when everyone thinks like, oh, we can't compete against the fintechs, it's like, that's rubbish. It would take Chase 10 times longer and cost them 20 times more. So the fact that most credit unions are actually working with off-the-shelf solutions actually helps them, because it means once we're integrated into that platform, the incremental cost and effort to deploy essentially zero.
I completely agree, but there are some things that you're missing, and they are unified things. So for example, if I want to set alerts, if I want to know, hey, I want to get an alert whenever whenever my asset goes above this or whatever.
Yeah, but that's back to the features and functionality debate. The question about would we ever provide an SDK?
But it's not if you open up an SDK or an API that I can use my own alert system and just query.
Yeah. So again, it's
that's the integration I'm talking about. Like for example, one disconnect we find a lot is ACH. So do you use the credit union's ACH, or do you? I guarantee you have your own ACH, or however you're getting that money from them. And so now the member's confused. Well, I set up an ACH to send money to blah, blah over here. And now I had to put in the same information again. How do they not know that? Why do they not have the MICR? That's the sort of dysfunction that we are hearing from our members. And so when we have an API where we go, oh, wait a minute, we'll pass you that MICR information. We're not talking about trying to rebuild your app. And that's a misconception a lot of vendors like yourself make, that you shouldn't jump to those conclusions. You should jump to the conclusion that they're trying to do more business with you and find a way to make it more integrated. So you could tell me what I would know and have my bias, but you have a bias as well. So, and you also look a lot like David from Schitt's Creek, which is pretty awesome. So I'll give you that as well.
I'm taking that one, I tell you.
Yeah,
I've been sucking in my stomach for an hour.
You look good. You look good. But you get my point? That's what I'm talking about. That's the type of integration I'm talking about.
Yeah, and again, we've talked to well over 100 financial institutions up to this point, which is still a drop in the ocean, but everybody has different infrastructure. Everyone has different capacity.
Oh yeah, and they're all not going to want that right away. I'm talking.
Talking about ACH, there's like 100 ways you can implement ACH with different institutions. So it's every time we do custom development, or it increases the cost, which somebody has to pay for ultimately. So everything you've said, I'm not discounting any of it. Alerts, absolutely. Tools to help gamification, it's all great. It's a matter of prioritization and how do we serve the most people and the most institutions at the lowest cost and fastest rate. And as you mentioned, in 10 years' time, this is going to look very, very different.
Yeah, and
in 3 months' time,
right. It's going to look different. And the reason you're not finding that is because most of these institutions are going, it's rubbish, it's crypto, like you're saying. But here's a quick way I could dip into it, get everybody to shut up. And they're going to realize real quick that it's not a Me Too product. What you're selling, and I'll give you that bet, I'm with you. What you're selling is not a Me Too product. The Robinhood, you're right on. I've seen all the kids going that way. What you're stating is gold, and everyone needs to know. So I'm not disagreeing with you there. I'm just going to say that what you think is probably this long it's just like home banking. When we last installed it, it looked like this. And when we go to do it again, it's bigger than you think. I think that ramp, because I think you're going to have such success, is going to be quick. And that's okay, because we're here to help you. We can integrate you all day long. Just give us an API. See, I just turned it into a bug for big. So
I love that. I love that,
no,
yeah.
I love where you're going with it. And I think that I love all the coins you have. And I think that this was a really good discussion. And I just bought the book, by the way. That was awesome. I posted it for everybody to see. Cody's saying he's working with you with Joe Swint.
Yeah.
If Cody's giving you shout outs, then you just earned even another big kudo in my book, because Cody.
I appreciate that.
No, I really enjoyed our discussion, and I appreciate it. I think that everyone needs to hear this. I hope more people will jump on. It was just great discussion, and I like your product. It's cool.
Let's do it again. I mean, there's so much to talk about here, and the beautiful thing is everyone deals with money, so we all have our biases and our opinions, and I think it's a really fun debate.
Well, but what's not a debate is if you don't provide these services, they're going somewhere else to look.
You're literally forcing your customers to go
right,
to go into
and that's what that
crypto
cryptoreport.com. I don't know if you've seen it, but you should go look at it. We're looking for another sponsor. Wink, wink. But we're trying to figure out, because we know for a fact that all the Canadians, a lot more and more. We've seen Canadians that started out, they've tripled the amount that's going out the door to crypto in the last year and a half. And so that number is just growing quickly. And we're just trying to get a report out there. It'll be a free report, just because people need to know. They need to know that this is happening. So great discussion. Yeah, I'm going to look further. I'd love to learn more. Mike, thank you.
We're going to be hearing a lot more about Ben and from Ben here in the near future. So I think what made me fall out of my chair when I first saw your stuff, and then when I talked to you, Ben. So I think this is fabulous. So yeah,
I would if you could convince them to bring it back. I love the show. I'm disappointed when the finale was there, so I'd like to see some more Schitt's Creek. So if you could make that happen, I would be thrilled.
Definitely cheaper.
All right, it was awesome. It was really awesome. Thank you so much for your time.
Thanks, guys. Appreciate it.
Well done, Ben.
Take care.
Good job, guys.
Bye.